Hello, everyone. Welcome to this webinar today. I'm Peter Towers, Managing Director of ESS BIZTOOLS, and I'm joined by Paul Barnaby, the Managing Director of Beyond Accounting Technologies. How are you, Paul?
I'm great, thanks, Peter.
Paul, we're going to talk today about diversification of accountancy services, but in particular, how predictive accounting can be probably the key diversification service that accountants can offer.
I would agree with that, Peter. The major reason being that to put predictive accounting into part of the service delivery, we've all been trained to do that. It's just that if we haven't diversified yet and we're still bogged down with tax and compliance, we won't have been doing it. So it's something we're trained for and is not easy to implement, but we have the ability to do it.
Okay, so I'm looking forward to having those discussions with you shortly. For our viewers who are watching us live, if you have any questions, can you please type your question into your computer, into chat, and put it through, and Paul and I will discuss those questions later. If you're watching this on the Facebook live feed, unfortunately, you can't type straight into us, but you can send me an email, peter@essbiztools.com.au, and I will get you the answer or pass it on to Paul, and he will send you the answer. And obviously the same thing applies if you're watching the recording of this video at a time more convenient to you, even if it is 3 a.m. of a morning, as someone said to me one occasion. I don't know what that made me feel, that I was top of the hits at 3 a.m., but nevertheless. Okay, Paul, I'm just going to take back the screen for a moment, and we'll start the presentation today. This whole series is really about diversification. So what accountancy firms need to sort out pretty early is what's your firm's points of difference, because you really need points of difference. Why? Most accountancy firms look the same. If you don't believe me, go out and start talking to some SMEs. And they basically think that all that accountants do is the tax return and profit and loss accounts and balance sheets. But what some firms are doing is creating industry specializations. And we're going to talk about one of the major industry specializations, which can apply to a whole range of industries, of course, today, and that's predictive accounting. And Paul's going to lead you through that shortly. Firms need to develop experts if we're going to really deliver business advisory services to our clients. And one of the key experts, in fact, more than one in most firms, should be in predictive accounting. But your experts might be an expert in how crowdsourced funding operates, or how the personal property securities register should be handled to save real problems with some of your clients. The Accounting Market Pulse report, which is produced by the Commonwealth Bank, when it was released in early May this year, indicated that only 5% of the accountants that they had interviewed all over Australia in small, medium-sized and large accounting firms were not going to undertake diversified services in the next 5 years. Only 5%. So obviously that meant that 95% of the firms that were surveyed, which the CommBank now believes represent Australia, they're all going to diversify services. And I'm sure you'll find predictive accounting is one of those big services. And the other interesting bits of information that come out of that survey, which if you haven't read it, I would recommend you go onto the web and just enter Accounting Market Pulse and you'll get the report. It should be a must read, I think. The other big item that was identified is that business advisory services was, by a long margin, the most popular new major service area that accountants are going to embrace this year and next year. It wasn't 5 years that question was looking at, it was now and next year. So business advisory services, have you got a strategy? Are you assisting clients to forecast and navigate the future? Because really that's what predictive accounting is all about. Now, Paul's theme today is there is a better way. So, Paul Barnaby, I now want to switch to you and you will tell us about the better way.
Thank you, Peter. I'll just share my screen and we'll be off.
Yes, yes.
Okay.
Yes, it's good now. Thank you.
Okay. So yes, there is a better way because as I was saying earlier, having the ability to put predictive accounting into that key business advisory services to your clients is probably one of the easiest or most practical to implement. Other services can be a little bit more complicated, but we do tend to have got bogged down with compliance, and as my slide says, there is a better way. Because what I want you to be, what you need to be, is that hero CFO with your client. I've used the word virtual there because most of your clients do not have the size or capability of having a permanent appointment as CFO. So you've got to be the virtual CFO advising them, not about their past, as Peter has just said, because you can't change that, but about their future. Past is an important part, as we all know, because we can learn from what went well and use that in the future. We can learn from what didn't go well and don't use that in the future. So it does have a part, but we shouldn't concentrate on it. So what is predictive accounting? Let's get down to the definition. Well, it's nothing more or less than doing for future accounting periods, months, quarters, years, what we've been used to doing with historic periods, months, quarters, years. And that is preparing revenue statements, profit and loss, balance sheet, but also cash flows, and producing those in what are traditionally accepted reporting formats. So it's like future accounting, if you like, and that's why I like the term predictive, because it's predicting what's going to happen in the future, maybe based on the past, but more correctly based on the strategies that we're going to use and advise our clients on. And why do we do it? Because it enables better decision making, faster strategic decisions, looks at cash flow so we can improve that, looks at maximizing profit, but more importantly, overarching, it achieves the goals that our clients have got as shareholders and owners. And how is it done? Well, we use the key drivers of revenue, cost, and capital items and translate those through into the predicted financial statements. I'll talk a little bit more about that in a little while. Okay, so what makes me passionate about predictive accounting? Well, I'm a chartered accountant. I was for a good number of years managing partner of a second-tier firm in Wellington, New Zealand. Although I do have dual heritage, I'm as much an Aussie as I am a Kiwi. And during that time, I sat at my desk one day and experienced what I think is called in modern parlance a light bulb moment. I decided that there had to be a better way of doing things, which is the topic of my theme today. And that better way was working with my clients to help them for their future, not look after their past. We were going to do that in any event, but working with them. So I took that leap into virtual CFO services. And I've since had more than 20 years frontline experience doing exactly that, implementing for clients predictive accounting, which embodies financial analysis, strategic planning, and of course, the all-important budgeting and forecasting. I have my own consulting practice, styled Beyond Accounting Technologies, but I'm also the regional integration consultant for a American company called Plan Guru. I look after the Asia Pacific for them, and they have a tool specifically for predictive accounting, which I'll talk about again in a little while. So I've now worked with many hundreds of clients, including CFOs, accountants, and business executives, and I like to think that I can help you look like a superstar. So how do you take CFO services to your clients? Is it a small step or one giant leap, as the old saying with the moon landing goes? Well, it certainly is not one small step, and it was not a small step when I did it. So here is the big one. The hairy one is to delegate all your compliance and tax work. Just get rid of it. I don't mean stop doing it. I mean just delegate it further down. I've got accounting firms that I can point you to that don't do any compliance or tax work. They just have a name as a virtual CFO, and they act in that role for clients quite small and medium-sized, and sometimes even large.
And this is a growing area, Paul, isn't it?
Absolutely. And the interesting thing is when they get a referral for a new client, the discussion obviously often goes like this. Will you do my tax work as well, Paul? Well, no, I won't. Who's doing it at the moment? Well, my existing accountant. But I thought if we transferred, we'd have to transfer the whole lot. Well, no. Does your existing accountant do a good job with your tax? Yes. Well, why don't you leave it there? We'll just do the fun bits.
Yeah.
And that appeals to clients. So I don't suggest you get rid of the compliance and tax work, but you've got to take it out of your day so that you can concentrate on that predictive accounting area. And that's where you might need to add some staff or resources to free up that time. And here's an important one. Tell your clients what they will now receive, because a lot of them want you to be their virtual CFO, but they don't know how to ask you for it. What I did when I made my giant leap, I went and visited every key client and told them exactly what was going to happen from now on. That they would have a different relationship with me. They would certainly still be able to talk to me on any topic, including tax and compliance, but I physically wouldn't do the work. I would be concentrating on my role now as their virtual CFO. And here's another very important one. You need to take the time to learn what makes your client's business succeed. You've got to find out what they do, how they do it, how their competitors fit with that, and so that you can advise them as you go through in that CFO role. And then you just got to take that leap and start delivering. Okay. So what are the prerequisites for taking those CFO services? Because what I've been telling you about is all very well, but if you're not equipped to do it, it's going to be a very, very difficult job. And I know some firms have tried, become disillusioned, and then even step backwards. We don't want you to do that. This follows on from my previous slide. You've got to discover and quantify what your client's goals are. If you know how their business works, you can talk with them and say, well, what is it that you want to do? I did a survey in my practice a long time ago and looked at the average income of a lot of my key clients, taxable income. Often it was less than if they went and did what they were doing on a salary. Were they happy with that? No way. So there was a key thing that you could work with for a starter, just to get the income enough to pay them not only the same as they'd get in salary and wages, but more than. And you've got to ensure you've got all the appropriate tools, including purpose-built software. I'm going to talk about that in a little more detail later, but it's no good going out to take CFO services to your clients if you're just not equipped with the appropriate tools, including software. And here's another important one. Involve your client with each step. Because we don't do predictive accounting or prepare budgets and cash flows for our clients and then just give it to them. It's a collaborative task. We've got to do it with them. Because if we do it for them instead of with them, guess who owns it? We do. If it's done with them, they'll have that sense of ownership. And this is a bit like the resources that I was talking about immediately. Train, if you've got somebody that's coming up underneath, train them to help you, because you won't be there every day. You might go on leave, you might be ill. If you've got somebody that can assist, it's often a very, very good idea. And here's the other thing, make data preparation as automated as you possibly can, because you don't want to spend time delivering your role as a CFO by bookkeeping and massaging data. You want that to be as automated as possible so you can get that to your client quickly. And the third aspect of the CFO services is what's actually involved in that service delivery. So the clear top one is a business plan. And the business plan includes the predictive accounting reports, budgets and cash flows, but it goes further and looks at KPIs and dashboards. And you want to be able to deliver those to your client in a form that they are going to appreciate. So you've got to be able to do different KPIs, different dashboards that your client will understand.
Paul, this is really about looking at the business plan, which also should have been prepared on a very collaborative basis with the client, not just the accountant going off and writing it. But it's really creating the financial picture of what everything's going to look like, interpreting the words in the business plan and putting it into a financial picture that the client might, I think, appreciate and understand a lot better.
Absolutely. What I'm getting at, Peter, is exactly that. But don't just give them the set of financial statements. A lot of clients just don't like looking at profit and loss. Show them a line graph that's going up as the earnings go up. Show them a bar graph that compares last year to what we're going to do next year. All graphic stuff that they can understand. But you're quite right, it is a picture. So make it a picture that they understand and appreciate.
Yes, and give them the variance in their business valuation, I think, should also be part of this overall process. So they can see that in 3 years' time, the company value has gone up by $1 million or whatever.
Absolutely, absolutely. So there we go. We've delivered a business plan, and that says month by month what we're hoping to achieve for that client. We follow that up as the actuals come forward with a monthly comparison. Bring in the actuals and compare it against the budget, and see what the variance is, and discuss it with your client. Often a quarterly review meeting may suffice. I don't think so. I always wanted monthly review meetings, because I don't think you can make decisions on your company's future only 4 times a year. You've got to look at the monthly results, and when you do that, take your results. You might have given it to them earlier, but go out to the client's premises and go and sit with them and act as the CFO on their premises. They appreciate it. They are more comfortable when you're doing that because they think your office is a bit of an ivory tower. So I made a point of doing that. And once you've looked at those reviews and looked at the variances, you'll be able to update maybe the strategies, but maybe even just update that forecast, because a budget's one thing, but a forecast is a continuously updated expectation of where we're going to be. And clients just love this because you're constantly telling them, okay, we didn't quite make it last month, but here's what we're going to do to make it next month or the month after or whatever, reviewing the strategy. And after you've updated that strategy, maybe you go back, maybe you just phone them, preferably, but definitely share those reports again with your client. So you can see it's an evolutioning process. Okay, I just want to do it quickly on budgeting methodologies and their selection, because this is very important that you know where I sit in this and what you should be looking at as well. The old traditional budgeting, taking last year and adding a bit for next year, just in my view, a waste of time. Because history may have absolutely nothing to do with next year. Then we've got zero-based budgeting, came out probably 20 odd years ago, and we were taught no budgeting ever existed, no accounts ever existed. You got to do it right from zero position. Very, very time consuming, and again, I don't advocate. What I do advocate is looking at what really drives that business. How many products are we going to sell? What price are we going to sell them at? What stock level do we need? What terms are we going to give to the client when we sell? What terms are we going to get from our supplier? This is my clear preference for effective predictions, because if you've only got a dollar budget and the dollars aren't met in the actual, what went wrong? You don't know. But if you've said price quantity, for example, for sales, either you've sold less if you didn't achieve your target, or you've sold it at a lesser price. And either bears explanation when it comes to that variance.
And Paul, this resonates a lot more with the client, doesn't it? Because they think in volume, they think in units of whatever they're making. and can get a better understanding rather than just the straight dollars.
Absolutely right. Yep. Okay, so you need a budget. What are you going to do? Well, reach for Excel or Google Sheets, right? No, wrong. This comes back to what I was saying before about the appropriate tools. Excel and Google, great, you've got to have them, but they were never built for predictive accounting. They were built for engineers, for chemists, for tradies, yes, for accountants, but never for predictive accounting. And would you go and recommend Excel if your client asked you instead of Xero or Mob or QuickBooks? No, of course you wouldn't. Then why would you use it for predictive accounting? If you're not already convinced, there's a fellow called Ray Panko. He's a real nerdy fellow at the University of Hawaii. Google him and you'll come up and see his research papers, which show that 91% of spreadsheets have got errors in them which the authors don't know about. I repeat, 91% have got errors that the authors didn't know when they published them. That is very scary. Okay, there is a choice of applications out there, and I'm happy to advise on anybody who would like to either question in or ask. I support that product called Plan Guru. The reason I support it is it has out and out the best features and capabilities when you compare it to its price. There's a lot out there that may have better than Plan Guru, but they're also very expensive. Its next best competitor, in my view, that has the same technical capabilities is around $40,000 to $50,000, and that's a subscription per annum. Plan Guru around $1,000 per annum. So that's why I support it. So just to give you a little bit of a taste, although I'm going to show you a live example shortly, there's a Plan Guru income statement showing month by month sales, and this is a computer reseller. So you can see they sell hardware, printers, software, and accessories. And so it's broken down into the detail that we require, right down to the bottom line, profit and loss. There's a balance sheet, and you might see it showing cash and cash equivalents there. And there's also a cash flow report. And I mentioned traditionally accepted reporting formats. The cash flow is particularly that. We're looking at what's called the direct method of cash flow reporting, which starts from operating revenues and works through to the operating result. You will see halfway down. And then we've got investment and financing activities. That comes up with a net increase or decrease in cash for the period, and then it calculates cash at the end of the period. So that's just a sample of the cash flow. I mentioned dashboards and graphs. There's an example of a cloud-based tool that's supplied by Plan Guru, and this is tailored for each client according to their requirements. You can badge it. You can put your own firm's logo, as I've got mine up here on it, and that allows you to share with their clients. Yes, if they want to look at it at 3 o'clock in the morning, they've just got to grab their smart device and go and look up their reports, which are secure because there is a 2-level security on this dashboard and analysis tool. So that's just a very, very quick summation of predictive accounting and how it's done. What I think I'll do, unless you've got any questions or there are any other questions, Peter, at this point, I'd like to talk about those key drivers again.
There's no questions come in at this stage, Paul.
Okay, so here is a very typical example of the sort of questions that we get as practicing accountants. Your client rings up and says, I'm thinking of starting a new business, and I've discovered this brand new fantastic thing called a widget, and from the 1st of July, I've got plans to sell them. And we're going to sell them for $50 each. We buy them for $30, so there's quite a healthy gross profit margin. We will need to have around 45 days stock on hand to meet the demand that we think will be there. We're going to sell on credit. It's a business to business operation. It's not business to consumer. So we'll be selling to other businesses and we'll give them terms, which will average 50 days. We will get terms from our supplier. We'll need to pay cash for the initial stock, but then as we replace it, we'll get 40 days terms. And we're thinking that we will sell around 200 units per month. Now, Peter, that's as I said, a very typical scenario that you could be faced with. And if you're a practicing accountant and you're not delivering the predictive accounting services, what are you going to do with that? It would put a lot into apoplexy because they wouldn't know exactly how to do it. They possibly would reach for Excel, as I was saying. Wrong. So what we can do if we've got the appropriate tools is very quickly, in this case, it took me 15 minutes to produce a report in PlanGuru. I'll just go and grab it. And you'll see there, I've got an income statement. So I've already translated those numbers into sales at 10,000 a month and cost of sales at 6,000 a month with a gross profit. We're not worrying about operating expenses at the moment of 4,000 a month. How did I do that? In the non-financial tab of PlanGuru, it allows me to do computations, calculations, anything I like. It's a bit like having your own spreadsheet, but within the confines of PlanGuru and therefore the standards that are applied by the PlanGuru tool themselves. So you can see there that there's our budgeted sales units, 200 a month. We're budgeting for $50 selling price. So therefore 10,000 a month is the sales revenue. We're budgeting a cost price of $30 and therefore there is our cost, 6,000 a month. And that links over into the revenue statement by picking up that sales revenue there and picking up that cost of sales cost there, and there we go, we've got that. Then what we do is I went to the balance sheet and translated those terms that were on that slide. So, for example, we're giving 50 days terms to accounts receivable. So average days to collect will be 50 days based on that sales figure. The inventory was going to be set at 45 days, but we're going to buy the stock up front. And that's why we've got $9,000 in the balance sheet straight up, and it stays at that level, but gets replaced as we sell it. Over on the other side of the balance sheet, we were told that we get 40 days from that stock supplier to pay. So that links back to that cost of sales. And the only other thing I need to take into account is net GST, because PlanGuru calculates GST for you. And you can see there that it's based on a quarterly, and it's going to be $1,200 for each quarter, and that translates back into the balance sheet. So, what's the cash result of all of that? Well, we're looking at the balance sheet now, and you can see that it's -9, negative nearly 10, -5, -2, and then it goes into positive. Let's see that shown in the cash flow report. So there we go. We can see in July that there's a $9,000 negative cash. And that's because we've maybe got some sales, but we haven't been paid for them. We've had to pay for the stock, which is why it's 9,000. And then that translates on, gets higher in August, and then drops down a little bit in September as cash starts to come in, and then goes over into positive by the time we get into October. So again, the issue here, Peter, is, as I said, that model in PlanGuru took me no more than 15 minutes to prepare, and I've got a result. So if that client had phoned me, I could have phoned him half an hour later and said, look, you're going to make this amount of money, but you're going to need $9,000 or $10,000 capital. Now, how impressive would that be?
Very good. And it really highlights how predictive accounting should be the #1 diversified activity that accountants are looking at.
Yes, exactly.
Because every business client needs this.
Of course they do.
Far more important than the tax return.
Of course they do. Yep. Okay, I'll just make sure so just going back to my slides, that's what I translated. You can see there were only 6 items that I needed to put in Plan Guru.
Yep.
The selling price, the cost price, the stock level, how many we're going to sell, the credit terms and the purchase terms, and the 200 units a month, and I had that result.
Very good.
Okay. All right. So again, Peter, any comments or questions there before?
No questions that come through, Paul. So yeah, you're most welcome to continue with your overview.
Yeah, no, I think I'm good. I think back to you now. If there's any other points that I need to cover, I think I've covered the main things about. Yes, I think the key that we started on was a better way. Firstly, that was my theme. But predictive accounting is what you're trained to do. And by using the rigidity of purpose-built tools and a system within your firm, you're going to be able to do that. And the last little comment I'd like to leave you with is when I'd put that in my own practice, after 3 or 4 months, I went back to all of my key clients, paid them a visit and said, how's it going? Just like a review as to how you're going and what you think of the new services. To a client, they said to me, Paul, what took you so darn long? That was embarrassing, but I got a big thrill out of that because I was then delivering what they wanted.
That's right.
Not what they had to have. They have to have compliance. They don't have to have predictive accounting and business advisory, but boy, does it pay them. There is a value attached to those services that they will never attach to compliance.
That's correct. Now, Paul, as part of our...
I'll just stop my share, Peter, just hang on.
Okay.
So that you can take it back if you want it. There you go.
As part of our strategy of looking at diversified services, you're one of our affiliates and you've made a special offer. So I'm putting that on the screen there now. Do you just want to talk to that?
Sure. What I'm happy to do is for clients of ESS BIZTOOLS that sign up, I'm happy to do a review of their current capabilities in predictive accounting. You may not be doing anything, and that's fine, but I will review what you've got in your firm. I will review who you've got in your firm and their capabilities, and I will look at the tools you've got in your firm. Now, it's a collaborative thing. We do it online, and I give you a report, not only on your existing capabilities, but where you should go from here. Okay?
Okay,
and
that's a great offer. Yep.
Yeah.
Okay, so thanks, Paul. And anyone who, I'll just bring this back up. Anyone who subscribed to ESS BIZTOOLS, you have a number of product offers. That's the one from Paul Barnaby, and it's a great one. So if you want to take advantage of that, you need to subscribe to ESS BIZTOOLS. Now, we got a special there also. We got a 57% discount for people who respond to this webinar today, because you can obtain our starter package for only $900. The starter package gives you tradies charge out rate calculator, which is great for tradies. One of our subscribers has got 110 of his tradie clients utilizing this, and he's packaged it around a monthly business review meeting, because obviously they're doing monthly financials. Just what Paul said before, everything should be brought back to a monthly cycle. And he's earning $5,000 to $7,000 actually dollars per client over and above the fee for the tax return and the annual accounts. With 110 firms, that's a nice little income earner for his firm. We got a retail pricing calculator, which will help retailers, professional service firms, a business health check for 5 businesses, the SME data systems manual, some leadership modules, over 340 papers on a wide range of business matters, a 38 questionnaire product, which we call Survival in Difficult Times, with associated mentoring articles, so you can guide your clients through difficult processes. So if you want to see the full details of what's in that starter package, please go to our website, essbiztools.com.au, and scroll down to learn more about other ESS BizTools products. You can add on to that initial starter package at any time. So if you find after 2 months that a client is talking to you about research and development, we have a product package for that. If you find out your client's interested in crowdsourced funding, equity raising, we have a product package for that. So just come back to us and we will negotiate an additional fee, but you'll get access to a product that enables you to give service to your clients. So if you're interested in subscribing to ESS BizTools, please go onto our website and click subscribe to Business Advisory Services Starter Package. And can you enter BASPBAT? That's your discount code, Paul.
Oh, thank you.
That's a bit of a mouthful, so I'm going to repeat it. BASSPB, that might be the giveaway, PB in the middle, AT. BASSPBAT. If you forget it or you weren't able to write it down, just ring our office and we will give it to you. Just insert that and that'll allow you to obtain that product for that special discount of $900. And we will then be looking forward to assisting you to implement, because you get 2 one-hour mentoring sessions as part of that. So I think it's a very good deal to get you started on this diversification path, which is very important. We also have a special offer from our affiliates beside what Paul just summarized for you. And the other affiliates, well, there's Paul's material again. And then we have Selling the Message, Brad Smart. This is all about communications. You have to tell your clients and prospects that you're now offering predictive accounting and what the benefits are. Don't just sit back and rely on the clients understanding that you're now doing predictive accounting. You have to communicate. We had a webinar yesterday with Brad Smart, and you can get a link to that webinar recording off our website. You'll find it very interesting because Brad talked about a whole range of communication activities that you should be undertaking. It starts with word of mouth, and then your website, and then a whole range of other things, social media, radio station, especially community radio, and other activities. Undertaking public speaking, getting your team trained. We also have Blackstone Business Group headed by Jordan Lowry. They're a human resources consultants. They've got an offer there to undertake a complimentary contract review and also to do a full review of your employment contract package for only $399. If you've got any of your younger accountants who are keen to go to a major conference, the Young Gun Conference, which has been deferred for 2 years, is now on the Gold Coast in February. And we really hope that this time it will stick. There'll be no more lockdowns. And Mark is offering a discounted subscription fee. You can find details on our website. Priscilla B. Smith runs Cloud9 Associates in Brisbane, and they have a promotion built around the CPD hours at a discount. All you have to do is to leave a review, and the first 10 firms that do that will get a significant discount. In fact, it will be free. And Amanda Gascoigne is a very experienced chartered accountant, and she specializes in advice for small and solo practitioners, and the first 10 firms can join her in a review. Our next webinars in this series are on Tuesday, the 21st of September at 11 a.m. AEST, offering diversified services. That's going to feature myself with Priscilla B. Smith from Cloud9 Associates. And on Thursday, the 23rd of September at 12 noon AEST, offering SME funding as a diversified strategy. Our guest presenter here is Dale Crosby. Dale wears a number of hats, but what you might know him about more than any other is that he's the Managing Director of the For Accountants website, which if you don't know about it, I really think you should find out about it, because it includes details of hundreds of suppliers to the accounting industry. You can peruse it for free. The firms that are promoting their services there, they pay the fees to be on there. So Dale's going to be talking about SME funding, part of which I'm involved in doing some presentations for him later in the year. So they're the upcoming webinars. You can register on our website, www.essbiztools.com.au. If you need any further information, please contact us. Send me an email, peter@essbiztools, or telephone me on 1-800-232-088, or please visit our website, essbiztools.com.au. And I'm going back to you now, Paul. Thank you very much for your contribution today. I know you will be very happy if thousands of accounting firms around Australia take on this concept of really supplying a predictive accounting service, and you'll be happy to talk to any one of them, even if there are 1,000 of them.
Absolutely. And I'll just leave you with the thought, there is a better way. Go and take the leap.
Yes, that's a great wish for you today. Take the leap, and there is a better way. For those of you who are still in lockdown, and I know some of you are coming out of it, but some seem to have gone back into it, we are thinking of you, and we hope that all of these lockdowns will be removed in the not too distant future, so everyone can get back to being able to move around this great country and obviously transact business. So once again, Paul, thank you very much for your contribution today, and everyone that's with us, thank you. Have a great day. Thanks, Paul.
Thank you, Peter. That was good. Yeah.
I'll just finish this off here.